Hello, hello, hello. Welcome to Stock Trades. In this channel, we love to help retail investors, thrive in a market that has definitely been uncertain for the past couple of months. So, what I like to do is I like to keep track of investors that have been right in the past 10 years and have some track record of success. Now, usually, Cathie Woods, if you were to ask people last year, she was a genius. But this year, if you were to ask people, well, they would say something different, right? So what I did is I did some due diligence and I reviewed a couple of things that she has stated within the past 72 hours and also 24 hours. And I would like to share with you my findings to essentially give you a different view of the market. Now, again, Cathie Woods, I've been following her work for quite some time before she became popular. She's honestly said the same thing over and over again, and honestly has not changed her investment thesis. Now, I do question some of the companies that she invests in based off of its free cash flow and traditional sense of finding the intrinsic value of a particular asset. But in her explanation, the lady has been in the game since the 1980s. So she's been in for a long time, longer than I have. So I'm going to explain to you a couple of things over what she basically stated. So she believes that we are going to enter a time of deflation. Now, what is deflation? Deflation is when unemployment levels rise, debt levels in terms of the real value of debt increases, and consumers start to put off purchases because the prices of things go down, right? It's honestly, it's really bad, right? You don't want deflation. But essentially what she talks about and what has she been saying is inventories are relatively high. And we are going to see a lot of discounts near Christmas. Now it's true. If you go, through other popular stocks that other uh, you know, eh, they call themselves investors talk about, like for example, Corsair, you can see that the inventories are spiking. A lot of companies, this is not just for Corsair Gaming, but a lot of folks, in terms of their businesses, they have a lot of uh, inventories, and they need to like sell all those as quickly as possible because they're sitting on an asset that needs to be transferred into cash, right? So there's this argument there, and we know that China is about to open up, and China, we know, is hindering the supply, right? The demand is high, but there's not a lot of supply. And China, with its COVID lockdowns, it almost wants America to enter into a recession, but they're bleeding themselves as well. So, um, Cathie Woods talks about how the Federal Reserve and the media, CNBC, and all the likes are comparing this time to Paul Volcker's era of the 1980s. And she says that this is wrong, right? And I was trying to, I'm seeing what she's getting at. I'm looking at the data and I am verifying that she is right to a certain degree. She talks about, and I have this written down here, so you don't have to spend an hour and a half trying to figure this out. So she basically talks about Paul Volcker raising interest rates from 10% to 20%. That's a double, right? That's 2x. But, and this is over a 15-year process, right? And then Paul Volcker came in and then he raised the interest rates from 10% to 20. But with Jerome Powell, he's raising it 16x, not 2x. So, these interest rate hikes, you got to believe it. We're going to be in a world of pain in the coming months and into 2023 because we have not yet felt the interest rate hikes just yet. People think that 75 basis points is not that much. No, it's a lot, especially when you start from zero. Okay. So take any number divided by zero and then you'll get the answer there. Okay. So now she says that this is not a 70s environment. 15 years, they 2x the federal funds rate in terms of interest rates. 15 months, we've 16x, if not more. Okay. So we are having a supply shock, which hopefully by the end of the year, after the elections, these supply shocks, even in oil, is going to start changing. In terms of politics, now, if you don't want to hear about politics, you shouldn't be an investor. It's a part of the game. Many speculate that the House is up for grabs from the conservative party, Republicans, and the Senate maybe up for grabs. So why does Wall Street likes, why do they like this? Well, because they like stasis. They like when things are not being passed, because if you pass, even Cathie Woods, right? If you pass things, a lot of these changes and rules, it usually hinders innovation. So once, most likely, the Republicans are going to take over the House, what we're going to see now is America not essentially moving forward in terms of bills, just becoming stagnant, which will allow investors to move forward, the country forward, and Wall Street to be able to anticipate in their intrinsic value calculations that they do in search for companies that they believe will make them money. So there's this argument there. Likewise, the oil prices are going to go down. Well, first they're going to go up before they go down, because they stopped drilling from the strategic, or stopped not drilling, taking oil from the strategic oil reserves right before the election to artificially decrease the price of gas. But that is going to come to an end, and we're going to see prices go up, but they will fall down because many businesses are going to start drilling harder and using those wells that are already, those permits that they've been already assigned. So I do speculate that gas prices will start showing some relief in the next 7 to 10 months. So now the difference between the 70s and now, in terms of the dollar, is the dollar is moving down in the 70s. The dollar actually is moving up right now, which Cathie Woods states that this is not so similar to the 70s. She says that, but we are seeing some similarities between 1918 and 1921 at, coming to the end of World War I, and also the end or near, the Spanish flu, hint, hint, in connection to the coronavirus that we experienced. The dollar went up during that time, and so that we are experiencing now as well. So during this moment, in the 1918s, we had a new innovation of telephone industry and automobile flourishing, which led to the roar. They call it the Roaring '20s, and that was a time where America experienced just tremendous growth. So, I see exactly what Cathie Woods is basically saying in this regards. And, she is, once she gets to this level of explanation, she understands that she started confusing her audience, because the data that she was saying, she was spreading out too many dates, and it would have been better for her if she would have had a presentation slide to help teach, rather than just from her notes. It's better to have the presentation for this. So why do I also agree with Cathie? Well, I agree with her because, she talks about how before the pandemic, they were invested in all these particular companies. And once we had a lockdown with the pandemic, we needed to research this virus. Well, mRNA vaccines took off, and genomics era exploded. Well, going to office work didn't work out. So we had to rely on our technology, and innovation solves problems. So we relied on Zoom and all these necessary outputs to essentially help keep us functioning. So again, innovation and technology solves problems. So I do believe her in this regards. Right now, the biggest thing and the biggest takeaway that I see from what she's saying is that, and I agree with her for this specific one, is that I want you now, guys, to focus in on the companies that you own and also the companies that you would like to own and companies that you're just looking at. And I want you to see what's happening with their growth. Are they growing during this environment or are they shrinking? And this is going to tell you how strong a company is. If they're growing during this market tightening and quantitative tightening, then I would say they're a damn good company, right? So this is what I'm going to be paying close attention to my holdings. And I've been, very public on Clover here, so we'll use this as an example. There's other companies as well, which we will be talking shortly and also in our bi-monthly meetings. But just we talk about Clover a lot. Let's just focus in on this. I want to look at its year over year. So I want to see, is it growing? And 2023 is going to be a good sign, because how are they going to compete against themselves making $800 million in 2022 while we're going to be in 6 months from now in 2023? Okay. So I hope this was helpful. I wanted to kind of give you another insight of Cathie Woods and give you this kind of like, what is she looking at? And let me know what you guys think and comment down below. And I'll see you on the next one.